Good afternoon, everybody. Welcome to TraderMerlin Show. It is your Thursday edition, an eventful Thursday. We had a pretty exciting, nice little all-green day for our markets. Well, at least the top 8 markets I look at here on the TraderMerlin Show. You know, we look at many more, but I have a kind of 8 market watch list, and all of them are green today, including the dollar at the low end and crude oil at the high end. Yesterday, it was interesting. I didn't cover trades. I had 2 trades I didn't get a chance to mention. I talked about my S&P trade yesterday, which, you know, it was fine. It was a little disappointing because I wanted to make a lot more, but at least we made some money on the day. So I'm going to start there, and then I'm going to go into the topic for today, just because I like to update you guys on portfolio and what I'm doing to my portfolio on a regular basis. So 2 things I did not mention yesterday. One trade that did not come through, I want to look at Oklo. So Oklo, of course, nuclear energy, backed by Sam Altman, was just down huge yesterday. And off of its peak from this October 15th trading high to our low we achieved yesterday, was down 41%. I was like, man, that just feels like a really good potential buy point here as it was coming into this area of demand. You can see I'll put a little yellow box on that area of demand, and that was kind of that buy point. I got super greedy on this one, and I was trying to sell puts at the $96 strike. I'll put a horizontal line there so you can see how far out of the money that was. So let's do a $96 strike, which is way down here. And the reason for that was, if you look, you can see there's a secondary demand zone right here, right there. And that demand zone goes all the way down to really 96 down to 90. Yeah, 96 down to 90, so a $6 range. I was looking at that one, and the premium was amazing. It was $3.35 per contract at the 96 strike. Now, keep in mind, 1% rate of return for the $95 or $96 strike would be 96 cents. Well, times 19 by 3, you're looking at over 3% rate of return for the October 31st strikes. And I was feeling pretty confident about it, but the spread was so wide, the open interest was very low. Nobody took the bait. Nobody decided to buy those or to buy those puts from me. So a little disappointed on that one. That one was a complete miss yesterday. So I was a swing and a miss. Nothing happened. Yeah, at 96. That's what I did. I did the 96. Yeah. And again, Stephen, the premium was like, if I went at the 110s, which was right below current price, incredibly high premium on that one. And I just decided not to take that big of a risk. That's going to be another topic for today. Someone asked about the top things that are helping me be successful as a trader, and I'll get through some of those. The trade that did get launched yesterday was MicroStrategy. I'm back in on MicroStrategy. As you can see, we've been in a really ugly sell-off here. I'm not a big fan of MicroStrategy, honestly. I think it doesn't look great. However, the premium was so juicy yesterday, I had to take a chance at it. I sold the 245s. Let me put that up here so we can get that on the screen. 245 puts, which you can see was pretty much this low point, or at least getting to that low point from back in early 2025. Now, it looks like we're going to get there. The way that this thing is selling off here, right, is just kind of drifting lower and lower and lower. Today, we had a little bit of an update, so that's fine for me. I sold the 245 strikes and collected $3.95 in premium. Again, if I wanted 1%, it would be $2.45 worth of premium. In this case, I'm getting $3.95, which is about 1.6% rate of return. These expire I put it right here for you guys so you can see it. These expire on Halloween. Hopefully nothing spooky there. So I took another shot at MicroStrategy, which is crazy. Steve, not for this week. It's actually for a week plus, right? So I did that on Wednesday, and going for a little bit further out, I decided to go for the 31st. The premium just looked pretty decent, and you know, for it to fall to that level, just to give people perspective here, and for those that don't know what I'm talking about, I sold puts, which basically says I am committing to buy MicroStrategy if it falls down to 245. Right now, it's at 285. So it have to fall $40. That is roughly a 13% slide between now and next Friday. Not tomorrow. So let's call it 8 days away. Do I think it can hit that in 8 days? Sure, of course it could. But I think it's a fairly slim chance, which is why I picked it. I don't necessarily want to get executed. But if it did fall all the way down to 445, I probably would be okay with that. And let me just collect the premium and then start selling calls against that position. I agree with you, Steve. This chart looks really bad. Looks really bad. And again, I'm hanging the hat on Bitcoin more so than I am MicroStrategy, right? Long term, I'm definitely very bullish on Bitcoin. I think it's struggling. The chart does not look great right now. If we can get this to to rear its ugly head and get back above that 114 mark we established this week, then I think we'll be off to the races again. I think the action today by President Trump, I don't know if some of you heard that news. I think I'm out of breath. I think his name is Xi Jinping. So Xi Jinping, CZ is what they call him. He was the guy who started up Binance. He was the Binance CEO, and he went to jail for violating anti-money AML rules. And he pleaded guilty. He just didn't put systems in place that would have prevented AML from happening for Iran and other countries like that. So, of course, the U.S. government wanted to make a spectacle of him. He was supposed to get, I think, 3+ years. He ended up doing 4 months. He got out last year. But what you had today was President Trump pardoning him. I thought that was kind of interesting. He's already done, but basically saying, no, you're fine. All that stuff can just get washed from your record. Now, I got asked this a lot when I was in Orlando, and you guys have asked me about this one as well. President Trump is trying to create allies in that crypto space. And CZ is one of the richest men in crypto with his holdings in Binance, etc. So it's interesting that he would pardon CZ, in my opinion, to get some favorable preferential treatment, and maybe CZ can help out his portfolio and help him build different projects. My guess is we will hear in the next few months that Trump is doing something with CZ or CZ is doing something with Trump, vice versa. But thought that was a really good strategic move for President Trump, which, as we've mentioned, is very invested in cryptocurrency and digital assets at this point. So let's go to the data for today. Of course, Big Eb says there's an angle for every move. Absolutely. Yeah, no shocker there. And, we'll wait and see what the final outcome is. But can you blame him? Right? If you're the president and you know that your family fortunes, not just yours, but all your family members are riding the coattails of crypto, you're going to do whatever you can to pump those bags. And CZ could be a very good ally for President Trump to inflate the prices of his crypto portfolio, which to me, it makes me even more bullish on crypto and digital assets. So there we go. Let's talk about this one. Waiting for CPI, Consumer Price Index, for those who may not know what it is. The expectations are right now that we're going to come out at 0.4%. Now remember, this was supposed to be released 9 days ago. We are also in the midst of a government shutdown, and you can see the chart there says previous was 0.4, expectations are 0.4. I'll be honest, I'm not going to believe anything that comes out of this. I'm not going to believe any data until the government is back up and running, because I'm not quite sure if I believe that this is an accurate representation of the data. If the team's not there, if that team is furloughed that's putting that data together, how do I know it's fair? How do I know it's accurate? And this is a question that Les posed. He says in a CNBC report, they claim that economists expect CPI to go up to 0.4%, which would increase the yearly inflation rate to 3.1 for both CPI and core CPI. If these numbers hold, will the Fed be willing to lower rates again? At this point, based off comments that have been made, we are probably going to see this pressure continue on the Fed. My assumption would be that even if it came out at 0.5 or heck, even 0.6, I don't think the Fed's going to change course right now, which means Big Eb's going to get himself a free dinner, because I made a wager that I didn't think we would see more than one rate cut this year. And we really shouldn't have seen, but I believe that the market is pressuring Powell and the Fed to do more than one. So if we look at the prognosis for this, even with that news today, and we'll see what happens after the CPI number gets released tomorrow, there's a 98.9% chance of a 25 basis point cut tomorrow. Or sorry, on the 29th of October. So to me, this is already baked in. I feel personally that the Fed is backed into a corner, right? The Fed is backed into a corner where every market participant right now is expecting a 25 basis point cut. If they don't cut, I think you'll see a big drop in the markets, and I don't know if they necessarily want to create that kind of panic. So what will probably happen is they'll do a 25 basis point cut on the 29th of October. And then at the press conference directly after that, if in fact these inflation numbers are higher than expected, Powell will say something to the effect of, going forward, we're going to hold maybe a bit more of a neutral stance because we are concerned with what's going on with inflation. We don't want to let inflation get out of control. And, to me, I think that's going to be the talk track that goes on. And maybe we see the probability shift for the December one. Here's right now the probability of December, which is also another 25 basis point cut. So that's a 91% chance that we're going to see another cut in December. So expectations are a cut in October, a cut in December, and then who cares about these other ones way down the road. So I'll leave those ones alone. Again, to Les's point, the CPI is an important one, but remember Jerome Powell has said specifically it's the core PCE price index numbers that he's looking at. Not that CPI and PPI are irrelevant, but he's not going to hang his hat on those. And again, the core PCE, we can bring up the dates here. Let me just run a filter for the US so you guys can see. And if you haven't used this, you should. If you click on forexfactory.com and you go on calendar at the top, you can literally filter out. So I'll go to no countries. I'm going to add just the US, and I'm going to take out speeches and business surveys. I just want to see, let's get bonds out of there too. All right, we'll leave those categories in. So what I'm going to do is just going to click through here and look for the core PCE price index, which is tentative to come out October 31st. Wouldn't that be a spooky Halloween one if we get a government settlement by then? But when will Powell see PCE numbers? Great question, Les. Given the fact that Powell is connected on the high hill, I'm sure, he may have access to the core PCE numbers before you and I do. I mean, right now, you can see here it says tentative next to the core PCE announcement for Friday, October 31st. Well, if that's a tentative announcement, that means government shutdown. And until we get a resolution here and our government actually goes back to work and does something, I think they do this just to give themselves a nice vacation going forward. So if we have a resolution before October 31st, maybe these numbers offer a little more clarity. I just won't trust anything until we're back up and running and operational. So I think, if anything, we should all have an air of caution to how we perceive this data when it comes out. What we do know is that tomorrow we get that CPI number, which is, again, delayed 9 days. I think it was supposed to be 9 days ago. What would it do if he gets the PCE ahead of time? Not much. The only real thing that would happen if he got the core PCE index ahead of time is it may shift his perspective on what to do on the 29th of October. Remember, core PCE comes out on the 31st. I'll bring up the map here, or the calendar again. That comes out on the 31st, right there. Well, we have an FOMC statement on the Wednesday before that. So 2 days earlier, you get the FOMC funds statement. I'm sure that Powell would like to have that core PCE before the Fed funds rate announcement, which right now, I don't think there's any chance that we would see it stay the same or get raised. It'll get lowered for sure. I mean, it's just baked into the market at this point. So for Les, I do share your skepticism, and that is, do I trust this data? What might the impact be? Unless we see something absolutely an outlier, I think this is going to stay the course of a rate cut in October, a rate cut in December, and then we'll reevaluate in January or February when they meet again what the rate situation may look like. But remember, we had that 0.9 reading on PPI several months ago, and that to me was just like, this is really bad. And then the next month it was revised and dropped down, and everything's fine again. So even if a monster outlier shows up on CPI tomorrow, I still don't think the market's going to freak out. So I would treat it as a nothing burger personally and just leave it alone, and let's not worry about that bad boy. All right, I have a couple questions here. I'm going to read them to you, and then I'll now let me just go through the markets first. Just so that I think that these might be from some of the students that I was in front of in Florida and in Orlando. Let me start at the bottom, work our way to the top here. Rob, I think nothing will happen. I think that nothing's going to happen on the CPI announcement for tomorrow. You probably get whipsawed during the release, but again, what's the trend look like? Are we stalling? Yes. Are we flattening out? Sure. But we're right at all-time highs as well. Again, for the podcasters, I'm looking at the S&P 500 on a daily basis here. Today was nice. We had that great sell-off after that spinning top on Tuesday. Wednesday, a pretty big down day. Today, recouping all those losses, and we're right back up to where that spinning top was on Tuesday. Now, the question is, where will we be on Friday? Right now, it feels like you have this nice panic sell-off on Wednesday. Thursday brought in some bullishness. Maybe that economic data is a driver for the markets on Friday. We'll see how CPI impacts it, but would not be surprised to see the S&P challenge, if not break through those all-time highs in a very short window of time. All right, dollar index, nothing. Other than a very negative-looking pattern, you guys can see we got the dollar index, and we could look at this from a lot of different perspectives. You could look at it the intermediate term, which is you're in a pretty big downtrend. Look at it in the very short term, you got a really nice uptrend going from those lows on September 17th, which we've discussed over and over again. And you can look at the micro, which is check out the candle for today, which is I guess technically a shooting star after a fairly nice run up. That would lead me to believe we'll see the dollar index sell off a little bit tomorrow, which should add some fuel to the S&P 500, which was up 0.56% today, and that may break us through all-time highs. So I do kind of expect a bullish day tomorrow, but you never know what's going to happen in these dang markets. I can come up with all the theories I want. Let's see. Liz says, whoever has been ordered back to work probably wouldn't want to risk being fired for releasing really high data, unless they really like being on this. Yeah, I'm pretty sure if it's a huge outlier, they'll be like, let's just wait until everyone's back in the office. I don't want to release that one. You would definitely grab the ire of the president if you release some astronomically outlier data. It'd be far worse to cut rates too steeply and then have to raise early next year just to leave it alone. I'm with you, Steve. That's why I made that bet with Big Eb, which was I think we'll only see one rate cut. And of course, now that ball is moving, the markets are all of a sudden all over it. The markets are expecting there to be more rate cuts. I've gone over it countless times. There is no need for us to cut rates right now. There's no need for us to cut rates. Inflation's slightly rising. You also have unemployment slightly rising. And I think that's why they're cutting, is the anticipation that unemployment is going to get worse. But a lot of the other data looks pretty good. Now, let's move up the list here, and I'll get to some very relevant stuff, particularly when we get to our number one market mover today. Here's NASDAQ. NASDAQ looks identical to the S&P, just a greater percentage. You had a 0.86% gain for the NASDAQ. Again, not the best looking picture. I mean, it's still gaining strength, but going to hit its head on those all-time highs probably tomorrow. Part of today's gains, Magnificent Seven. If you look at the Mag 7, Microsoft is unchanged, but Meta, Apple, Google, Nvidia, Amazon, Tesla all moving to the upside. Tesla was up 2.28% today after that little dip there this morning on earnings, right? People were freaked out about it. I did not sell puts on Tesla this morning. I was going to, but I just did not have time. I was too busy. It's caused me one. Yeah, it's a great move. Great move to the upside. Great move up in Tesla, erasing those losses. And if we bring in a 5-minute time frame here, this is where you have your argument for pre-market trading and after-hours trading. Anything shaded that you see here, that's after hours. So you can see the earnings announcement here after the close on Wednesday had some pretty big sell-offs, and then really the opening rush. For those of you who understand order flow, the market turned. Well, only 5 minutes into the session. Typically, there's a 15-minute window when order flow gets filled in, and then it switches direction. And you had a nice reversal there in that opening 15 minutes, but then just driving back to the upside. And again, this is Elon Musk. This is the Musk factor. Musk basically saying, look, give me that $1 trillion pay package, and I will increase to, what did he say? I think the number was 900, or I forget the valuation. It's just some monstrous valuation of Tesla going forward, creating a robot army. And I think if anybody's going to deliver on that, it's Elon Musk for sure. Right, back to the top. We had Russell, 1.23%, but still same picture. A nice uptrend, higher highs, higher lows. Stay long, stay strong. No argument there. This one surprised me a little bit. You had a pretty big spike in the 10-year yield. Was up 1.26% today. Thank you, Stephen. Yeah, $10 trillion in 10 years, I think. Man, considering it's not even at $1 trillion yet, or it's probably right at $1 trillion now. That's a pretty lofty goal. But think about it. If he can be first to market, not only with the fully autonomous robot that you and I can now use for whatever purposes we want. Yeah, you've got 360 million people in the United States. Let's just say 50 million of them want a robot. I know a lot of people don't. I am absolutely in that camp. Man, I'll tell you, I'm going to have some festivities at my house this weekend, and I'd love to turn the robot on and just let it clean up all next day. Man, I'll order 2 of them damn robots. Clean my house. It's going to be a mess, and outside too. If we can get those types of numbers, I think that this far exceeds the demand for cars like Tesla, especially on the retail side. But then you move over to corporate side where businesses will be using them. And then that brings in other questions, right? Yes, we'd have corporate profits just through the roof for Tesla because a lot of businesses would be jumping on Tesla to get these robots so that they can improve their efficiencies. Just like Rob says, robots, no more salaries to worry about. Forget the salaries, Rob. No more health care, no more sick costs, no more. All that stuff with normal employees goes away. No more Bob and Karen having an affair in the broom closet at work. No more Lee and Bob fighting every week and creating a distraction for all the other employees. Like, that stuff all goes away. The efficiencies and productivity gains are going to be off the charts. And this is something that Kathy Wood was talking about at the conference for the Fed, was talking about productivity and efficiency gains historically have been relatively low, even through the Industrial Revolution. But now you look at what robots are going to bring to it. Man, automation is going to absolutely change the world. I'm glad I'm the age that I am. I'm really worried for people, for young children, and what are they going to do when, 30 years down the road, they go to get a job and it's all robot dominated. Who knows? No more falling off of ladders, fixing stuff. Yeah, robot fix that. Robots will work through the lunch hour too. Absolutely. The downside of all of this, and this is something that I think Don Fron was talking about too, is I'm all for automation. I'm all for the robots. I love it. There will be job displacement, and I don't know how we're going to fix that part, right? When you have humans being replaced and all of a sudden it's all robots, where do those people go to work? Do we get universal basic income because people just don't have jobs anymore and they can't work? I don't know. That's something we'll have to have a greater discussion in another 5 years or so, but I think you're going to start to see a lot more robots just pretty much everywhere. Rita says, Terminator, absolutely. Absolutely. I'll be back. No, it is coming. It's bad. The robots are coming to a bed. They're coming to you. They're going to take your job. Sorry, my Arnold Schwarzenegger impression is very bad. It's from watching Conan the Barbarians, my favorite. All right. Anyway, I'm losing it. So yeah, I think Tesla is in a very, very good position. I've been bullish on Tesla for a while now, and I do think we'll see it continue to move up. Big Ollie says, Elon promoted universal income. I think he may as well. He's gonna have to figure out how people get paid. All right, moving on. So gold, 1.97% gain. We talked about it having a potential buy opportunity. Les actually sent me some. If you go to the contract specific, let's go to GC and we'll look at contract specific. Boom, gold futures. Let's go to. I like the December contracts. I know I don't like the monthlies. I like the quarterlies. My brain's still stuck in quarterly mode. It still didn't quite get down to that demand zone, but 4,000 was pretty close to where it should be. Unfortunately, it didn't get down to the demand zone and create a buying opportunity, but this is where you get, if you're selling puts or something to generate premium, that zone would have been absolutely perfect. So nice bounce out there in gold today. Bitcoin having a little bit of a recovery, but still not looking good at all. All right, this chart is not that great looking until we get above 114 and change, whatever the high is from where my cursor is, which is 114,380 on the futures. Still feeling slightly bearish on this bad boy. So once we get some feet underneath us, I think it'll start to move fairly quickly. I don't have the chart up here, but you can look at the leveraged short positions. And right now, there are far more heavily leveraged short positions on Bitcoin, which is great because if all of a sudden they start to become liquidated, you could see this thing pop right back up to 124, 125, 126 in almost no time, right? That's the beauty of leveraged positions getting wiped out in crypto, and you can see those all on a blockchain. Finally, and really one of the more important pieces for today, crude oil, right? We talked about that double hammer pattern. You got a little bit of follow through on Tuesday's session. Wednesday, nice rip to the upside. Today you had a gap and go. Of course, this is more sanctions on Russia, as we discussed. You're actually coming into an area where I would have expected it to pause just a little bit, right? And that level starts at about $62, all the way up to 63. And we tailed into it today. So from a nice bounce, you look at the lines that would have been drawn here. It's from 57, 37 is the breakout point, and your target is 62. So basically a $4.63 jump, and it happened in 2 days. Well, 3 days. So pretty good move up there in crude oil. Does that mean that this downtrend is over? Not necessarily, but just a great pop up there, and especially because it's off of supply, it's off of demand, and it is off of chart patterns. All right. Okay. Got you, Aller. No problem. I know some of the names seem very different today. I wonder why things change, but I see a lot of you have different names on your screen today. Interesting. So let me real quickly add this question to the table here. Hold on. And feel free to type in. Actually, before I do, let me read some questions here. Merlin, can you show me how to convert basic Coinbase to advanced? I don't have my note here. Yeah, bottom left-hand corner, there's a button that just says ADV. So I'll show it to you here. Let me go to make sure. I'm going to set it up so it's on basic so you can see what happens there. Bear with me. I have to log in here. I've had all kinds of, I redid all my passwords and everything and had to move. I got a new phone. I got this stupid looking orange iPhone 8 or iPhone 17, iPhone 8. But I need to get my two-factor authentication in here, and then I'll walk you through exactly how to do that. 1 second here. Okay, so now I got my two-factor authentication. So it's super simple. RT, if you look over here, this is what you get when you go to the basic platform for Coinbase. And you can see down the bottom left-hand corner, it just says advanced. You click that little slider there, and immediately it flips you over, and there we go. So now you're on advance. Done. I love it when I can answer a question in like 3 seconds. Perfect. Let's see. Let's start trading robots with respect. Oh, easy, Andres. Don't get ahead of yourself, bud. As I said about the farm workers when the combine came on the scene. It certainly took away some jobs, Big Ab, but there's obviously a need for some farm workers, and there's going to be a need for workers to service robots, but I think the majority of jobs are going to be displaced. Let's see, listen, I'm an automotive mechanic, so I guess when they take my job, I'll just find a job to fix robots when they break. Yeah, I think that a lot of the manual craft trades will probably do better with humans. Yeah, I think that like a plumber, I think that your mechanics and type jobs will probably be safe. I think it'll be one of the last ones to go. All right, let me look here. Maybe it was a YouTube update. So here's the question I got, and I'm going to read this one to you from Ben. He says, as a swing trader, what do you look at most to anticipate market direction? This is an easy question. Very, very simple. I look at price. So whatever it is that I want to trade, it's what is price doing. That's the most important thing. And I try not to lead too much, meaning I'm trying not to let my opinions of a company change my perspective. For example, we've got a gentleman who loves to come in here and ask me about stocks that are just absolutely getting slaughtered, just getting murdered on price charts. His name is Michael. And Michael loves to look at things that have a chart that looks like this, right? Like, what should you be thinking with a chart that looks like this? You should be short, right? Just do nothing but short it. So for me, the trend is your friend until the bend at the end. I think it's probably the simplest mantra you can think of. And if it's trending down, you should look to short it. If it's trending up, you should look to go long. It doesn't get much more simple. It's kind of like saying, for anybody here who's into winter sports, if you see an avalanche, don't try to run up the hill. The probability of survival is like nil, right? You run down the hill. You go with the direction of where all the momentum is, because there's nothing that anyone in this audience is going to do. Not one of you could do anything to stop a market sell-off if it really gets aggressive. So you find the opportunities where you like to buy it if you're buying on a dip, or you short it, right? You just go with that trend as that market is selling off. And to me, that's the easiest way to anticipate market direction is just look at what you're trading. What might contribute to those moves, right? What might cause or give me a higher probability of being on the right side of the trade? Well, there's a lot of different things. Number one, I would say for me is I want to look at US dollar. I like looking at the dollar index. And the reason is this is a much bigger picture. Much bigger picture. So this is not necessarily for swing, well, it's a couple days or weeks, but if you're a position trader and looking at 401ks, the dollar is a massive influencer on your portfolio. And right now, the dollar's been chirping sideways, not really doing much. It's starting to show a nice little uptrend here in the shorter term, but for right now, I'd have to start thinking that we're going to see dollar strength here. Even though it flies in the face of everything that I believe and know about markets, I feel like we have to go down to the dollar. There's some force that is pushing that dollar to the upside. And if that continues, this is going to be problems for the equity markets. So even though I might be bullish on the equity markets, if I see the dollar continue to surge, ultimately that's going to have an impact on the equity markets in a negative way at some point. And why have we had such great market moves? Because the dollar fell from 110 all the way down to 96. Massive. Oh man, Rocky. You survived an avalanche? I can't even imagine. My claustrophobia and anxiety is like spiking. If I had my watch on, my heart rate probably just doubled right there, just because the thought of being stuck in an avalanche under a wall of snow and can't move or do anything, freaking me out. I'm glad you survived, my friend. That's got to be one damn scary situation. So to Ben's question, what do I do? The price of the security, whatever it is I'm trading. And I don't care. You can pick any ticker symbol. I don't know. I'm going to make up HE. I have no clue what this is. Hawaiian Electric. At this point right now, I'm looking at going long Hawaiian Electric. It doesn't matter what I believe about Hawaiian Electric, what I think about Hawaii, anything. All it looks at is the price chart here. And what's it doing? Since January of this year, it's been choppy, but overall making higher lows, right? And I'm just throwing in, how about LAD? I don't know what this company is. Lithium Motors. I actually would leave this one alone. I literally just typed in 3 letters and this is what I got. I leave it alone because it's making higher lows, but also making lower highs. That's not a great trend. That's just compression. How about 3 others? How about GRU? Greeley Automotive Holding. Go long. The trend is your friend until the bend at the end. And what's it doing? It's making higher highs, higher lows. What I don't like is a $2 stock with low volume, so I wouldn't touch this one anyway. So run filters before. So there you go, Steve says I'm long HE. Nice. So for Ben, number one is price. Number one would be US dollar. The third thing I think is really important, and this is very kind of a macro piece here, is crude oil. Now, I know that seems weird, but crude oil is so impactful from an inflation perspective. And today, you look at what's gone on the last 3 days, look what's gone on with crude oil. We're up over 10% in crude oil in just 3 trading sessions, 10.42% from those lows we saw on Monday. Why is this important? Because the issue we have right now is we have seen oil from its peak on June 25th fell 28%. That obviously has a great impact on inflation. When oil falls like this, transportation costs drop, plastic manufacturing, the cost to manufacture plastics and a whole bunch of other petroleum-based products drops significantly. Jet fuel drops significantly, which is more profit for airlines. So using crude oil as kind of this foundational piece for driving prices in different markets, to me, becomes very important. And if I look here, a 10% jump in crude oil in just 3 days is pretty bad. Obviously, the data we're going to get tomorrow on CPI is not going to include the jump over the last 3 days. It's just not going to include it. It's too recent, right? That report is already baked. It's done. So this could be problematic for our markets going forward. If this continues to rally, let's say we get above the supply zone I've got drawn out here at 62, and crude oil continues to rally up to 65. Markets are going to start to suffer. Exactly, Rob says the costs get passed on to customers. Yes. So when you see airlines and it's a $500 ticket to fly to, let's say, Orlando, well, if their energy costs have jumped 17% in the last 10 days, your ticket's going to go up by probably $100. That's a 20% jump. Well, some people will still buy that ticket at $500. Others might, or at $600. Others might walk. So unfortunately, this is a major driver of price I don't think a lot of people really look at, is the impact of crude oil, and that would be another one that I watch. So Ben, as a swing trader, what do you look at most to anticipate market direction? Number one is price, and I also like chart patterns. I guess I should put in here as chart patterns. And then, the US dollar and oil. There you go. What else do we have? Type in Beyond Meat. Did it crash back down? It should. Oh, yeah, we're down another 20% today. Who didn't see that coming, right? You know that when this thing, which was a steaming pile of dog do, jumped from 60 cents up to $7.50, it's going to come crashing back down. And there's a lot of these meme stocks right now. BKKT, yep. There's another one. This is a SPAC. I actually was in this one when it first did its SPAC piece. Luckily, I got out of this one early and made a profit, but not much. Not much. Airlines do hedge pretty well. They do hedge pretty well. However, we've seen periods of time where they can get caught off guard, especially when you have really big swings up or down, and that could impact them significantly. So, all right, what else did I have here? That was market drivers. I even prepared a couple graphics here for you. Market drivers. Last one here, and this wasn't from Ben. I didn't change the name. I forgot who sent this one in. Sorry. So what's the single most important factor to your success as a trader? I'm assuming this is from one of the Florida guys. Look, I don't think I can narrow it down. I don't think anybody in here could narrow it down. There's so many factors to a trader's success. I would argue, if I had to pick one, I'd say risk management. The ability to look at a situation and analyze it from a risk perspective and say, nope, not going to touch that. Just like yesterday, there was a gentleman, I forgot what the ticker symbol was. You asked me about a specific stock, and it looked okay, but as soon as I looked at volume, it's off. Risk management. I cannot take that trade. Going and counter trend trades, looking at liquidity issues, looking at the ticker symbols. For me, I have notes in my trading plan that say I can't trade biotechs, I can't trade pharmaceuticals, and I can't trade Apple stock and Cisco, but it's not really written in there, it's implied. And those are because of failures in my trading in the past, and I just don't want to relive those ones or get emotional about it. So for me, risk management, I think discipline is key, sticking to your rules and having rules. And as was mentioned here in chat, a plan. One of my favorite quotes is, if you don't know where you're going, any path will take you there. So just like you should have a plan on how to be successful as a trader, you should have the same plan as, here's how I'm going to get through college and go achieve my degree, right? There's a process to it. And if you start off with the plan in place of how you're going to achieve that goal, you can look at all the forces, pro and con, against your trajectory on how you plan on going. If that happens, if you analyze everything, you can now make that that distance between those 2 points, where you're starting and where your goal is, and you can make it much more efficient by removing barriers, removing obstacles, talking to mentors like this program and saying, okay, how can I make this better? How can I get to that point faster, as opposed to learning along the way and making all kinds of trial and error mistakes? So that's what I would say. I'd say risk management. I'd say discipline, having a plan. It's not about finding the best trade. It's not about having the best trade. It's a summation of hundreds, if not thousands, of trades over your career that make you a successful trader. So I would say also, you need to have a process of review. So if you do get in a position where you're losing money and you're getting your butt handed to you, as happens sometimes, you have to have circuit breakers, just like the stock exchange does. That circuit breaker should say, I'm done. I'm going to take a break for a couple of days. I'm going to reevaluate not only my trades and what I've done, but also how I can improve on those. What caused those errors? And I think a lot of that is journaling, documentation. Let's see. Andre says, having and following a plan. Rob says, patience, discipline, and timing with the trade plan. Risk management is number one. Yep. But jumping on GME works so well. Why wouldn't... Yeah, right, Les? Oh, man. It's funny. I think I told you I was at Shabu one night, and the guy next to me is sitting at the table next to me, or at the bench next to me, was talking about how much money he made on GameStop. And of course, I'm just trying to spy a little bit. And then, he talked about he made so much money on GameStop in a short window of time. And then he said he kept adding the position and just lost everything, and then way more money than he ever thought he would lose on a trade. And I'm like, well, yeah, you're trading stuff that just is super high risk, volatile, dangerous stuff. Stay away from it. Real bad. Document and review, do only what works and don't give it back at the end. Yeah, document and review is a big one. Document and review, right? Most people don't do this, and I think everyone should. I think you should go to the store, grab a little, pack of notebooks, little spiral notebooks like I just waved in front of the camera, and just have each day. Okay, here's Monday. Put on today's date. Jot down why you made the trade, what you were looking at, what you were thinking, what forces caused you to make that decision. I would even put a little plus and minus column and say, here's why it could work, here's why it may fail. And after that trade's done, see if you can improve. If any of those pieces could improve your trading or make that trade better, do it and implement it, right? But and the other piece here would be, don't change too many things at once, right? Change one variable and test that for a little while and see how it goes, right? In like a recipe, you make a recipe and then you add an extra little bit of salt to see how it tastes next time. What you don't do is you don't change 15 different ingredients on the second batch, because you won't know which ingredient had an impact on what, unless you're a professional chef or something. Steven says you can take a screenshot of each trade. Yep. And notes on the screen. Absolutely. There's many digital ways that you can keep track of all this stuff now, which I think makes it a little bit more exciting, a little bit easier. But when I was doing it, I like to manual write stuff down and analyze trades. So there you go. Sorry I didn't get the name on the screen there. That was my Trading Zen graphic there. And I think once we find those pieces, right? Once you get all of the strategies and plan and risk management, and you define your discipline, and you have a trading plan, which should be a written document, by the way. I mean, everybody here should have a written document that is your business plan. I look at trading, it's my business. It's what I do. So I need to know how I react in all kinds of different situations. What is my business plan? How am I approaching this? How am I moving this business forward and going to grow my account, compound it over time? That's the ultimate goal. If you don't, you won't know what's working. You'll end up losing your money and not be a trader. All right. Yeah, we're going to wrap it up here. We've got a short day today. From an Intel's a popcorn trade of the day. 7% is a pretty big jump here. We can actually bring up Intel right now. They came out after market close and had a nice jump. They beat earnings by 2,200%. That's pretty good. Let's go INTC. Right now, as you can see on this chart, price kind of maxes out about $38.13. We close at $38.16. It's currently at $40.86. So what I'm going to do is I'm going to delete some of these lines. Let's go remove all the studies here. 3 drawings are gone. I'm going to put a line in the after-hour session because I always like to see, are we gapping up into overhead supply? All right? Are we gapping up into a level which may be impactful? Ooh, look at that. I'm going to zoom in here. Not quite. Not quite the origin of the gap. I would say if we could jump up a little bit higher, and tomorrow if you open up somewhere right around, let's say $44, which is almost $3.50 higher, that would be a better level. But right now we're at 40, which is kind of the origin of the gap down there. So and I don't think that'd be too big of an impact on supply and cause the price to push down. But anyway, Tesla was a popcorn trade, but it didn't really move much, right? Intel, I just thought we'd bring it up here just because it had such a big gain in the after hours. It's up 6.8% in the after hours. It was already up 3.36% during regular trading hours. Fantastic for old Intel. You had Ford beat earnings, and they were up almost 5%. And then you look here, energy stocks. Valero beat. You had American Airlines beat, and they were up handily. Honeywell beat and was up big time. So PG&E is one of the only ones that didn't really do well today from an earnings perspective. Now for tomorrow, got one day left, October 24th. There's Procter & Gamble for those of you looking at consumer staples. You have HCA Healthcare, General Dynamics, Eni as well. And then, as we already talked about, the economic calendar here. Let me bust out and let's remove the filter here so we can see what's going on. So for tomorrow, a lot of big stuff, right? If you're trading the Canadian dollar, you have GDP numbers. So you have the GDP numbers coming out for tomorrow at 8:30 a.m. Eastern time. And then for the U.S., you see a lot of tentative stuff. Oh, sorry. No, I'm sorry. Take that back. I'm on the wrong week. I didn't click on there. 24th. My bad. Let's fix this one. Here we go. I meant to say there's a lot because we have the services manufacturing numbers, and you can see it starts over in France, and then it goes to Germany, then the EU, then the British pound, and then the U.S. as well. So a ton of information coming out tomorrow if you're trading any of the euro or British pound. And then, of course, our CPI numbers coming out 1 hour before the equity markets open. That should create some waves, but I don't anticipate it being that wild. Here is the year-over-year change in consumer price index, and right now it's at 2.9. Expectations are it's going to come out at 3.1, which will put it just slightly higher than the number we saw back in February of this year. So I don't think that this is an overly dramatic thing, but it would be making the highest level it's reached in over a year would be if we got to 3.1% on the CPI year over year tomorrow. So that's certainly one big piece to keep an eye on. I don't think it's going to be the piece that changes the trajectory of the Fed's decision to cut rates on the 29th. I think that's going to be pretty much locked in. Earnings come up again. Yeah, next week, Rob, is the monster week, right? Monster week. And that's pretty much it. You have services manufacturing numbers, University of Michigan, consumer sentiment as well, but that's it for the U.S. Now, the question came in from Steven. He said, Merlin, would you sell your Intel position if you were long? Man, that's such a great question. It was a great question because you heard me talk about this where I mentioned if I could buy a chip company, it would have been Intel, and that was way back when we were consolidating. I don't remember exactly when, but it was way earlier this year because it was so downtrodden. And the talk track was that Intel was going to split into two separate companies and start doing enterprise development. It felt like they were the right ones. I would probably, you guys know my rule, I would probably sell half my position on the open and then trail stop the second half. Right? You can always buy back in if it collapses, but what I don't want it to have happen is that it collapses and I'm left holding my whole position. It really, I guess, depends on where you bought it. Could this go much higher? Yes. Intel, I think, has probably turned a corner here. You know, they got their new chip coming out, which they say is going to be, increased product or increased sales and a huge bottom line increase to them. Maybe. I'm not a chip expert by any stretch of the imagination, so I couldn't even tell you the impact there. But my argument early on was that Intel is a dinosaur who's not upgrading their stuff, and now all of a sudden they are. So I would be content taking half off the table, especially if you bought back when we talked about it, when it was down in the $20 range. It means you're up 100%. Yeah, I would take half off and let the trail stop, go for the second half, as Big Eb says. It's certainly, to me, it would be the easiest thing to do and give you that little element of safety there, knowing that you're out of half of it. All right, so that is pretty much it for me. I didn't think anything else was big. I had the notes and stuff I wrote down here, but I got it all written. I got it all covered today. We talked about the trades from yesterday, which I forgot to mention, and now we have the MicroStrategy on the portfolio. We'll see about adding some stuff tomorrow. I just didn't see anything that tickled my fancy. I'm being a little bit not gun shy, but I'm erring on the side of caution right now for my swing trades just because of the government shutdown. I'm nervous that when it finally does open back up, we'll get a flood of economic reports and the market's going to digest this and kind of have a really jittery couple of days, and I just don't want to be a part of that. So we shall see how it all happens if we finally get some resolution. Right? It's been quite some time now. We're getting in lengthy time on this government shutdown. So all right, that's going to do it for me for today. Hey, guys, if you have any questions, things you want me to discuss on tomorrow's show, email me for those who sent in the questions. I forgot the gentleman's name, but we had Ben, which I gave you credit twice, Les as well, sending those questions. If you have something you want me to talk about, just send it in, TraderMerlin@gmail.com. You know I'm pretty much open to any topic, so send them on in. If you're new, hit that subscribe button, the like button. I will see you guys tomorrow. Take care.